Hello everyone, welcome to Officer 24/7. My name is Nehar Kavalia Bhatnagar and I'm with you with the area of accounting and financial management for bankers. And we are talking about May 2024 and this is our series for achievers. Acha everyone, what have we started with? We had started with a specific chapter called the depreciation. So I'm going to continue with depreciation with new numerical questions. So this is what we'll be considering in the particular class. First of all, if you like the session, go ahead and click it up. Like the session. If you had been watching my series, please like my sessions every single time you see the video coming up because your appreciation is the first and the foremost thing that keeps us going on. Secondly, if this particular session is helping you, please go ahead and share it among your peers as well. Thirdly, if you haven't subscribed to our channel yet, then go ahead and subscribe the channel. So let's continue further and let's talk about depreciation in detail. I'm going to talk about depreciation from the point of view of numerical as well as from the theoretical point of view. Plus, when we talk about this particular chapter, there is depreciation. It's a super duper important chapter. This particular chapter is extremely important just because of the fact that this particular chapter has been asked in the examination not only from the point of view of case studies, but this was in the previous syllabus. It was in the module A, one of the most important modules which had greater weightage as compared to other modules. So now, let's continue. Okay, so we were talking about depreciation and its accounting. Acha, what do you mean by depreciation, everyone? Depreciation is usage, wear and tear. For example, let's talk about it. I have my specific, I'm just using a specific phone. So if I'm using my phone, then this particular phone is used every single day. So if it's used every single day, its value is decreasing every single day, right? If I bought a phone today, now after 3 months, its value is going to decline. After 10 months, it's going to decline further. And after the particular time when the entire, I would say, when the entire models are changed, then the price goes down like further, right? So when a new model comes, the old model loses its price. The same thing happens with the cars and same thing happens with the machineries that are being used in the organizations. So it's way too challenging to utilize something like that. Now, when we talk about depreciation, how does it work? Acha, we have done this part yesterday, so the same slide is still available, just in case you haven't seen the previous class. And if you haven't, then go ahead and watch the entire series. I've covered from module A, unit 1 till now. So this is what you'll find in the previous class as well. What is depreciation? Depreciation is a non-cash expense. Why do I say non-cash expense? This expense is not paid to anybody else, but only you know कि अरे I am incurring expenses because I'm looking forward to my survival. है ना? Every business looks forward to it. The decrease in the value of an asset is due to its use caused by wear and tear or by any other reasons. So that's how we define the area of the depreciation. And always remember, depreciation is compulsory, right? You cannot skip the portion of depreciation. It is not voluntary. Once you start using an asset, it is depreciable. And there is no point where the depreciation is not applied. Secondly, we talked about the depreciation over the period of time. Acha, everybody, we talked about depreciation. Na? Do you know, before I proceed further, how many methods are there? In terms of depreciation, the methods which are covered in your book only. That is all the portion that I'll be discussing. The number one method that is given is original cost or SLM, straight line method, uh, or SLM method. Second method is called diminishing value method or WDV method. Wese there are other names as well, but these are the most common ones: diminishing value method and WDV, written down value method. Then the third one is double declining. Then the fourth one that is covered in the book is sum of digits. And the last one is units of production. That is based upon the units that you produce. So if you produce more units, more depreciation. You produce less units, so less depreciation. That's the entire crux of the units of production area. Sum of digits, there's a specific formula for it. Double declining is basically doubling your depreciation because of its usage. If it's used more, then the double declining method would be there. Acha. Moving forward towards the questions. So we are going to cover the area of SLM as well as the WDV. Acha, in the examination now they have started playing with us. They are asking the questions not only from the formulas but also from the point of view of the fact that they are asking the questions on what basis those formulas are made. Matlab, they are asking questions from the area of assumptions even. Smart work. That means people cannot just say, in any ma'am, I know numerical more, I'll just do the numerical part. Or you can say, Kinini, I'll do the theory more because I'm good at theory. They are asking questions which are theoretical but taken from the numerical area. So that's the smart work that they are doing in terms of the IIBF examination. So how much prepared we are is something that we have to determine. Acha, so I've given you the entire brief information of all the particular operations. Now tell me everyone, what is the basis of calculating the annual depreciation in the SLM method? SLM method is also called original cost method. It is also called fixed installment method. So that's the third name, right? So what is it based upon? Salvage value, purchase price, estimated useful life, or all of the above? What is the basis for calculating annual depreciation? When we talk about the basis for calculating the annual depreciation, the scrap value is super important. Purchase price is again super important. Then estimated useful life is again a very vital part of it. So all these things are extremely important. So what makes the answer is all of the above are super duper important when it comes to the area of depreciation. Acha, how is the annual depreciation calculated in the straight line method? What's the formula? Purchase price minus salvage value, purchase price divided by estimated useful life, salvage value divided by estimated useful life, and then is purchase price plus the salvage value. What would be your answer, everyone? Think I might have to improvise the particular point. It is actually whatever your purchase price is under straight line method, whatever your वैसे तो B would be the answer, but normally there is one more point there. Whatever your purchase price is minus your, if there is a salvage value, then you consider it. If it is nil, then obviously this turns out to be 0 divided by the estimated life. For example, everyone, I bought a machinery worth rupees 20,000. By the end of fourth year, I can sell it for 4,000. And its life is for total 4 years. So in this case, it would be 16,000 is the total amount that you will recover from the machinery in over the period of time, 4 years. So technically, in this case, my answer is going to be rupees 4,000. Got it, everyone? So in this case, the answer is going to be the purchase price minus the salvage value, scrap value, or residual value. Any of these things divided by the estimated useful life of the asset. So this is what we consider when we are making this particular area. Now comes the next point. Why is the straight line method more relevant in for assets like plant and machinery? It considers the market fluctuations. It provides tax advantages. It assumes the constant, consistent performance over the useful life, or it allows for accelerated depreciation. What would be the answer? Why is the straight line? See, वैसे ना, if you look at the income tax department, it allows only the usage of SLM or the WDV method. Rest other methods are not used. This is an easier method. One of the easiest methods is SLM or straight line method. Okay, so why is this more utilized in this case? Basically it says ki if we talk about our business there, we will assume that throughout the life we are going at the same pace na. So in this case it is assumed that the constant or consistent performance is there over the useful life. Okay, now comes the very important question, that is what is the primary difference between diminishing balance method and the straight line method? Okay, so in this case, what would be the answer, everyone? When you're looking at the primary difference, but one of the major differences between WDV and SLM is SLM says throughout the life have the same depreciation. Diminishing balance method says you have more depreciation in the beginning because by the end of the life of the asset, it's almost gone. If I look at the depreciation of my phone, I just open the seal 10,000 minus. If it's an iPhone, you bought it for 80,000, then obviously nobody is going to buy at 80. If you have just sealed open and then you didn't use it, maybe 75K. After a month, it will decline further. Maybe after 6 to 8 months, it would decline at 70. After 2, 3 years, we all know that we will get not more than 40, 45, or even less than that for that, right? Because once 2, 3 years have passed, the new the version of that particular model is available at the same price as at we are trying to quote. So technically, in the beginning, the depreciation is more, and by the end, it reduces further. This is the particular thing which diminishing balance method says. In the original cost method, whatever our original cost is, you find the depreciation and then the same depreciation is there till the end of the life of the asset. While in terms of WDV or written down value method, once the value of the machinery is chosen, the depreciation is charged in such a way that if the total amount is 10,000, say your depreciation is 5% in the first year. So it would be 500 rupees in the first year. You are left with 9,500. Then in the next year, again 500 of the 5% of 9,500. Whatever your closing balances under the portion of WDV method, you choose the closing value and the depreciation is charged on the closing value. It is not on any other thing, but it is on the closing value. The diminishing balance method assumes a constant depreciation value. The diminishing balance method assumes a constant depreciation rate. Straight line assumes more depreciation in the early days, and the straight line method assumes more depreciation in the early days. वैसे तो स्ट्रेट लाइन मेथड अज्यूम्स सेम वैल्यू ठीक है they have the same value while when we talk about WDV it says the depreciation rate is same. The difference doesn't occur anywhere else. It is just the constant depreciation rate. Now, how is the annual depreciation calculated in the diminishing balance method? Purchase price divided by estimated useful life, purchase previous year's value into percentage, or purchase price minus salvage value, or salvage value divided by estimated useful life. How is the annual depreciation calculated? When we talk about the annual depreciation calculated, annual depreciation is calculated on the basis of in WDV. Whatever your closing value of the previous year is, you will always find the closing value and multiplied by the percentage of depreciation. And that particular, the rate remains the same. The value keeps on changing after every year. So depreciation overall will vary. So in this case, the correct answer will come out to be the previous year's value multiplied by the percentage rate. Now comes what does more depreciation tends to occur earlier in asset life mean in context of the diminishing balance method. The asset increases in value over the time. The asset loses more value in the later years. Asset loses more value in early years, or depreciation is constant throughout the life of that particular asset. Everyone, what would be the answer in this case? We have just talked about it, and the example was an iPhone. The value decreases more in the initial years because you buy it and then you are using it, and then the value goes down. So once the value goes down, it's definitely gonna something that is going to hurt us. So right. So when we talk about this area, it's gonna be like that only. Now comes the asset loses more value in the initial years, and after that, once it's declined, it is declining only. Then you are mentally prepared case ki value, the value of the same is just going, the value of that particular asset is not going to have a sudden major dip. It is just in the beginning that you will find a major dip. In which situations is the diminishing balance method more relevant? When the asset is expected to provide consistent performance over its life, Then when the asset is expected to give better performance in the initial periods, when the asset's market value is unpredictable, or when the tax benefits are a primary consideration. When we talk about diminishing balance method, when you are using it more in the initial years, and then it would be stabilized. So then, because in the depreciation in the initial years on the basis of rate would be more. If the value is high, then obviously if I bought an asset for 10 lakh rupees, now let's look at this. I bought an asset for 10 lakh rupees. The depreciation on it was 10%. So in the first year, the depreciation was way too high. It was 1 lakh rupees. Now I'm left with 9 lakh rupees. On the basis of this 9 lakh, again 10%, that is of 90,000 rupees. So I'm left with 8 lakh 10,000 rupees. Then if you look at the remaining 10%, then it is basically 81,000. Then you are left with 729,000. Can you see the point there? The depreciation is decreasing because your opening value or the closing value of the previous year is decreasing. So if the value is decreasing, the rate is always on the closing value of the previous year. So technically it keeps on going down, it is dipping. So you will always find more depreciation in the initial years and lesser depreciation in the later years. That is because the value of the asset is more in the beginning, and the rate is always calculated on the closing value of the previous year. Now, in terms of original cost, if it is 10 lakh rupees, this is WDV everyone. And if I show you the SLM method, if this is of rupees 10 lakh, na, so every time you will find the depreciation remains the same. In the first year, it is same. In the second year, continued with the same amount, because it is said to be 10% of your original cost, the cost at which you bought it. So we are left with 8 lakhs. Then you remove further. Then you are left with 7 lakhs. So you can see the difference. That is, the diminishing value method is more realistic. It says that when we are using thing, then the value falls down more, right? Now here comes a question, everyone. A company purchases equipment for rupees 50,000 with a salvage value of rupees 5,000 and estimated useful life of 5 years. What is the annual depreciation using the straight line method? 10,000, 9,000, 8,000, 7,000. Okay, so let's calculate this question, everyone. Showing you the method. Under SLM method, what is the formula? It is your cost price or invoice price minus your residual value divided by estimated useful life. So technically we have 50,000 minus 5,000 divided by 5 years. So in this case the amount is of rupees 45,000. You know, 45,000 divided by 5 years. So if the life of that asset is 5 years, na? So in this case, the answer comes out to be 9,000 rupees is the depreciation per annum. So over the next 5 years, we will depreciate rupees 9,000 every single year. So your depreciation is going to be this. Acha. Just a little moment is required. I'll just, this was the formula. Okay, it is actually annual depreciation is equal to, this is the amount, so in this case the amount turns out to be rupees 9,000 altogether. So this is how you can see it, everyone. We have the purchase price minus salvage value. Salvage value is also called residual value. Okay, done everyone? One more question to go. An office building was purchased for 2 lakh with a salvage value of 20,000. Estimated life is 20 years. Calculate the book value at the end of 10th year. 2 lakh minus 20,000 divided by 20 years. So technically, annual depreciation is whatever your purchase price. You bought it for 2 lakh and you remove the salvage value of 20,000. You know, and the life is 20 years. So technically, that comes out to be 1 lakh 80,000 and you divide it by 20. So in this case, my annual depreciation is of rupees 90,000. And you are talking about the depreciation over the period of time. By the time we are hitting the portion of 10th year, it is actually 9,000. Yeah. The depreciation is of rupees 9,000. And if the depreciation is of rupees 9,000, so by the end of the 10th year, the depreciation till now would be 9,000 multiplied by 10. That means 90,000 is the depreciation that has been charged till the end of 10th years. So out of 2 lakh rupees, you remove the area of 90,000, what you're left with is 1 lakh 10,000 is your amount of machinery. Hello everyone, welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the era of AFM. Okay everyone, so what are we going to talk about today? I'm going to start another unit. The name of the unit is Capital Expenditure and Revenue Expenditure. The particular topic relates to the area of what is capital and what is revenue. See, every business works for two things. Actually, just one. That is to have more income. But the point is, it just wants to multiply its capital. If I invested 10 lakh, I wish it turns 20. If I invest 20, I wish it becomes 30. If it becomes 30, I wish it becomes 40. So all these things should happen. So when I expect that these things should happen, so I need to find out what amount of money is my regular income and what amount of money is going to enhance my regular income. Find difference, something that will help me to earn on a daily basis, and something which increases this daily basis amount. This is the difference between capital and revenue expenditure. Talking about this in the beginning, first of all, please like the session if you haven't done it yet. Then at the same time, share the session among your peers, and along with it, if you haven't subscribed to our channel, do the needful as early as possible. Okay, now comes the first part, everyone. Okay, our double validity sale is here. So what you can do is you can look forward to this particular sale where you have got 81% off on our Mahapacks along with the double validity. So what you can do is you can check it out on our website or in our app. You can use the code Y541 and get 81% discount and double validity on our Mahapack. So hurry up and do it as early as possible, and by the end of this video I'll show how to go and how to proceed further towards getting this double validity as well as Mahapack 80% discount. So let's talk about it. Now comes capital and revenue expenditure. How do you define capital and revenue expenditure, everyone? The capital and revenue, this increases our ability to earn more, right? Capital expenditure increases our ability to earn more. While when we talk about revenue, revenue expenditure refers to the expenditure that we are incurring in the business and we are trying to have our daily basis income. Matlab, if I say that to earn more, I have to do certain things, na, that is revenue expenditure. Sorry, that to earn the basics. For example, if I want to earn more from my shop, or even if I want to earn from my shop, I have to bear the electricity expense. I have to bear the water expenses. I have to bear the expenses of the rent and the expenses of the material that I'm requiring. Technically, these expenditures are required to earn basic income, right? I'm sorry. So to earn more, what should I do? I have to expand my shop. That is something that can be done. है ना? So capital and revenue expenditure means when you are earning your daily income. My basic business is to sell calculators. Matlab, let's just do that. I sell a specific kind of calculator. Now selling this calculator is just a good to me. कि ठीक है, I am selling this particular calculator. That's it. Now, if I sell the touchpad and the pen because I'm upgrading, what is happening? I am normally someone who's selling calculator. These are something which I use for my work. And while doing the work, I thought, let's upgrade. This makes my work easier. If that particular thing relates to my business, my calculator, the shop is of calculator, and then I use all the equipments to reach out to as many people as possible. So the tools and equipments that I'm using to earn, if I upgrade them, I'm trying to earn more. And when I'm talking about the expenditure that I'm incurring on the selling, that is earning. You are maintaining your daily earnings. It's a revenue expenditure. When you are trying to earn more, it's a capital expenditure. The basic difference given in our book is this. Number one, the amount spent is usually large. I'm trying to upgrade my machinery. It may cost in crores, but revenue expenditure, I am paying salaries to my employees. That is regularly required. If I don't pay the salary, why would they work for me? The purpose is to improve or enhance the business or productive or earning capacity. We are trying to have better business. The purpose is to maintain the fixed assets in a good working condition. We would always want that we have a best condition for our fixed assets. The benefit is of long duration. It is for a longer duration. This one is for short duration. You are doing a capital expenditure that will help you earn in the future as well, while short duration will help you to earn at this point of time. Non-recurring, which is not done on a repeated basis, and recurring means which you do on the daily basis, repetitive in nature. It is shown in the balance sheet, it is shown in the profit and loss account. The difference is when you spend on a capital expenditure, you are building an asset. And when we talk about the revenue expenditure, we are just having a profit and loss account. Matlab, our profits are based upon this. So this is the total scenario regarding the area of capital and revenue expenditure. Okay. Now, based upon this, shall we proceed and talk about the MCQs there? Chaliye, then let's begin. Acha, which of the following is a common test to determine whether an expense is of capital or revenue nature? Frequency of occurrence, then effect of revenue, earning capacity, duration of benefit, or all of the above. We have talked about all of these on the basis only. Frequency of occurrence, you don't buy a building every day, do we? My business is of selling calculators. I won't buy a building. When I'm buying a building, I'm trying to expand my business. So the frequency of occurrence is more in revenue while less in capital. So tick mark. Then effect on revenue earning capacity. When I'm trying to earn more, if it is stable, it is revenue. If it becomes more, it is capital. So this is also there. Duration of benefit. Acha, the benefit that we reap out of a machinery or land is the years to come. There is no definition, especially in terms of land. There is no definition. The benefit is something you'll reap for years and years and maybe generations even. But when we talk about the cars and everything, they have a life 14, 15 years. So max 2 generations can enjoy it, right? So, or when we talk about the salary that we pay to our employees, the benefit is just for that particular month. So, revenue expenditure has duration of less than 1 year, and capital expenditure has a benefit duration of more than 1 year. है ना? It is more than 1 year. So in this case, what's the correct answer? The correct answer is D. All the nature of expenses can be determined by considering the factors such as frequency, occurrence, effect on revenue, earning capacity, and duration. What is a recurring expenditure, everyone? Expenditure with long-term benefits, expenditure occurring frequently, expenditure for increasing revenue, expenditure with short-term benefits. What is a recurring expenditure, everyone? How do we define a recurring expenditure? The word recurring means repetitive. है ना? Anything which is on a repetitive basis is called recurring expenditure. So the expenditure which is occurred frequently is recurring. Okay? So that can be the point. This is frequently done. You pay for rent every single year, every single month rather. The salary is paid every single year. you every single month. In every year, 12 times you have to pay. In raw material, it might be required even after a week, right? So that you might be making something which is perishable. So you might be collecting it just a week before. So that can also be done. So that is the raw material purchase will always depend upon the perishability of the item. Salary you have to pay monthly. Rent you have to pay monthly. Then commercial electricity bills and are for monthly basis again. So they are repetitive in nature. They are done 12 times in a particular year. So technically the answer is B. Expenditure occurring frequently. How is the effect of a revenue earning capacity used to distinguish between capital and revenue expenditure? We talked about this particular question in the very beginning itself. How does this happen, everyone? It if it generates the income in the current year, it is revenue expenditure. If it generates income over the multiple periods, it is capital expenditure. If it is recurring, it is revenue, and if it is non recurring, it is capital expenditure. What would be the answer, everyone? See, capital expenditure will increase your revenue earning capacity, while the other one will not. Okay, so in this case, what would be the correct answer? In this case, when we talk about the revenue earning capacity, distinguishing between uh, capital expenditure, वैसे तो everything here it is correct. How is the effect of revenue earning capacity used? Acha, revenue earning capacity, then this case the answer is B. The revenue earn, they are just talking about the revenue earning capacity. Na? The capital contributes expenditure which is long term. You get the benefit not for 1 year, not for 2 years, but you get it for many upcoming years. Acha, next pointer. What is the primary purpose of capital expenditure? To cover day-to-day operational costs, to acquire assets for long-term use, to increase short-term revenue, or to fund research and development? What would be the answer, everyone? What is the primary purpose of capital expenditure? When we are having capital expenditure, na, capital expenditure is done for a sole purpose that we are trying to have the benefit over the period of time, isn't it? So in this case, what would be the answer? The correct answer would be to not to cover day to day, to acquire assets. I think the point would be B again, because you are buying an asset. For example, I bought a building and the building costed me at this point of time is around 1 CR. I paid 1 CR for that particular area, and then okay, based upon the commercial area or whatever the subsidies I've got. So I got it for 1 CR, 1 crore. So now from this building I'll be helping my colleagues to work, to help my juniors to work. All those people are working under the same roof where I am the boss there. You know. So in this case now this is the place which becomes the home for my business to work upon. So technically this is something which will help me earn more in the upcoming future because the organization has a physical place, right? What are the initial costs in context with capital expenditure? Day-to-day operational cost, cost of relocating or reorganizing, or purchase price, duties and non-refundable taxes, or cost of opening a new facility. When we talk about the initial cost, the answer is C. The purchase price, duties and non-refundable taxes. Let me give an example. I bought an AC, everyone. They brought the AC, they transported it to my place, and then the cost of AC was 33,000. Transportation cost was 1,000. And installation cost, the person who would come and install it, their price was 500. I can never say कि पता है the total amount of this AC was 33,000. To make it ready to use, I had to spend 1,500 more. If someone comes and just puts it on my floor, can I use that AC? No, I can't. It has to be mounted on the wall. It has to be connected properly. Only then I can use it. No? So technically, anything which makes it working is to be considered here. So the answer here would be 34,500 instead of 33,000. Okay? So technically, when we talk about this kind of scenario, the answer is always based upon whatever asset expenditure was required to make sure that the things are done properly. That was to be covered. Then comes which costs are not classified as capital expenditure according to this area only. Okay, I'm not making a case study right now. So, which are not classified as capital expenditure, everyone? Capital expenditure would help us to earn more in the future. So, it will not help in current earnings. It will help in future earnings. Okay, na? And everyone? So, the answer would be cost of employee benefit arising directly from the construction or acquisition, cost of day-to-day servicing, or cost of site preparation, or cost of major inspection for potential defaults. The which is not defined as capital expenditure. This is not a daily expenditure. This is a non-recurring expenditure. So the answer is cost of day-to-day servicing is basically what? This is basically a revenue expenditure. Okay, another question. What types of assets are covered in IND AS 38, everyone? Tangibles, PPE, property, plant and equipment, or intangibles, or both A and B? When we talk about the area of IND AS, under IND AS 38, they cover the area of intangible assets. All the tangible assets are defined under property, plant and equipment. All the intangibles like goodwill, trademark, copyright, right? All those things are covered under intangibles. It is covered under IND AS 38. It deals with the intangible assets such as computer software, plant, patent, copyright, trademark, soft rights. All those are covered under IND AS 38. Acha. Everyone, all recurring expenses are deferred revenue, revenue expenses, capital expenses, or deferred uh, capital expenditure. All recurring expenses, everything that you do every single day or every now and then that you're doing, that is all a revenue expenditure because you are doing this to earn more money. If I want to earn more, I have to spend on electricity and water expenses. I have to spend my money on the the employees that I need every single year for the working there. So technically, I have to bear those expenses. Those are termed as revenue expenses. Done? Okay. Then comes the freight expenses for moving machinery to a factories. Revenue, deferred revenue, capital, or none. This without this freight expenditure, you could not have got this particular thing at your place, isn't it? If I wanted to move it to my place, I couldn't have done that if the freight expenses were not paid. For example, I bought that particular AC. So in that case, till the time the AC doesn't reach my place, then how is it ready to use? Even though I've bought it, but it has not reached my place yet. So in this case, what will happen? It would be treated as the area of capital expenditure. So this is a part of an important area, but you need to know what kind of machinery it is, right? So that has to be known to you. Otherwise, it is actually called a capital expenditure because you are trying to earn more. For that, you might have to do a lot of expenditure because that will make the particular thing ready to use. Acha, next question. Which one of the following is correct? Is incorrect. Replacement of defective part of machinery is a revenue expenditure. Then wages paid for erection slash installation of machinery is a capital expenditure. Underwriting commission for issue of shares is revenue expenditure. And excess of sale price uh, of machine over its WDV but less than the cost price is treated as revenue receipt. Okay, this one is absolutely wrong. There is nothing called D in this word. Okay, what would be the answer in this case? The underwriting commission that we pay, it is not a revenue expenditure. It is basically an expenditure which is capitalized first and then written off over the period of time. So technically, this is not a revenue expenditure. This is one of the deferred revenue expenditure. Okay, something the benefit of it has been delayed. Then that would be underwriting commission for issue of shares. Next question that comes for an expense to be classified as a revenue or capital expenditure that is based upon the kind of expense. Such as this is what we have done already. No? In this case, the right answer would be D. all of these. My name is Niharika Walia Bhatnagar, and I'm with you with the area of AFM, that is Accounting and Financial Management for Bankers. I hope I'm clearly audible as well as visible, everyone. Before I proceed further, please go ahead and share this session. Don't forget to like it, as well as if you haven't subscribed to our channel yet, then go ahead and check it out. Okay, so what am I going to deal with today? As I told you earlier, we are looking forward towards our series on the basis of the entire new syllabus of AFM, right? So this series leads to that area. I have started with module A, and we are done with the unit of depreciation. Now I'm moving forward towards the next unit. Acha, everybody, the JIIB sale is on. Number one thing, that means at this point of time, you have double validity on all our Mahapacks and 81% discount. Matlab, this particular thing is one of the best things to happen at this point of time. Maximum discount and maximum validity offer. So how do you get it? You just have to use the code Y541 and you will get 81% discount. So if you're looking forward to it, then hurry up because this particular offer is valid only for a limited period. So the best option is to do it as early as possible. Okay, so that's about the specific area. Now I'm starting with the next chapter. What's the name of the next chapter? The next chapter is called the Bills of Exchange. Acha, what do you mean by bills of exchange? Bills of exchange is a negotiable instrument. मतलब an instrument which can be bought and sold. ठीक है? So the term is negotiable instruments. When we define the term negotiable instruments, how do we specify them? Negotiable instruments are those instruments which can be bought and sold, which are other than money, right? So because money is the medium through which we purchase and sell it. Now comes the point, what is a bills of exchange? There are two parties, party A and party B. When we talk about party A and party B, there's a bills of exchange. Party A is basically buying something from this party B. Party B says, if you're buying something, then give me a proof. I don't know you personally, so just give me in writing that I basically party B is ordering party A there. I order Mr. A to provide me this much amount of money, or the person I'll acknowledge. That means the person whom they call is the seller or the pay or the payer he has chosen. Okay, pay. It is basically the seller or pay. मतलब the person seller will allot to him कि ठीक है you will receive the payment on my behalf because the buyer will have to pay the money, so he's the payer. The party who is getting the money is pay, or any other person that he will determine कि हाँ this particular person will get the money. So that's how we define the specific area of party A and party B. This is actually called the bills of exchange. Now, bills of exchange is basically I order party A to pay me or the payee 10,000 rupees after the acceptance of this bill on, let's say, this should be paid on 31st of March. Okay, so will the bill be applicable on 31st of March 2024? No. In case of bills of exchange, you normally get on the due date, you get 3 days grace. This is called grace period, which is given in every case. That means the bill will be officially due on 3rd of April. Okay? So technically, this is a bills of exchange, a short-term way of raising money. At the same time, this is something which will normally mature in less than 1 year. Normally, it's hardly for 3 months. It doesn't go beyond that normally. Okay? So that's what we define in terms of the bills of exchange. Now, as I told you, there are three people. There is a drawer, there is a payer, and drawer, drawee, and pay. This was seller or party B. This was buyer or party A, and payee. See, I said that you will have to pay me. A said, okay, I'll pay you. Or then there is a particular person, Mr. C. I owe 10,000 rupees. I owe 12,000 rupees to Mr. C. Now, Mr. C is standing on my head and saying, give me the money right away. I said, give me some time. He says, no, he doesn't have time for me. I'll have to pay him rupees 12,000 right away. He's not giving me any time. So drawer or seller B said, okay, I am supposed to receive money from my the buyer who has bought goods from me. What I can do is I cannot give you 10,000 rupees right now, but I can give you the right to receive money from that particular person. So I'm giving away my right. You take that money from him. Then the payee will say ki acha, why should I do this? I said, you wanted money from me na. Agar if I have to give, I'll take more time then. He said, okay, whatever is visible, whatever is available, payee will rush after it. So the payee will say ki acha, technically he was supposed to pay 12 to me. He is paying 10, even if I'm giving a discount of 2,000. At least I'm getting 10,000 back. It's fine. I'll take the loss. So in this case, payee will be given the money by A. Now, when he will go to A, ki, Hanji, give me my money. A will say, who are you? Then he will show the negotiable instrument that the seller B has given him the right to receive money. So that's why the drawee is the payer. He's the one who is paying the money. Now, the money can be paid to the person who had drawn the bill, or this drawer can sell the bill to someone else. You know? So he'll receive money for that, and that is how, matlab in this case, it is just a settlement of liability. It can be anything. So that's how the entire bills of exchange are prepared and their entire working is given. Got it, everyone? Acha, this particular chapter is again a little lengthier. Just like we did the depreciation portion, in the same way we are going to do the bills of exchange as well. Okay, so let's deal with it. Acha, everybody, here comes the first question. The first question says, what is the purpose of credit transactions in the business? Why do we do the credit transactions? Is it because to increase expenses, to reduce sales, to facilitate purchase and sale of for deferred payment, or to decrease cash flow? Why would someone pay, everyone? The point is, if I have money, then I will not bother anyone. Okay, na? If you need the money, I'll pay you right away. Why to do that chick chick? Nobody will have a problem there. But if I'm in the retail business, the person who is buying goods from me, he'll say, I'll give you money tomorrow. I have to pay to the person from whom I have bought the goods. Matlab, this is the chain now. I am here, my buyer is here, my seller is standing behind me. Now he'll be asking me my money, and I have to wait for the buyer to pay me money because I am taking things on credit from him. How will I pay them if this particular person is taking time? But just because this thing happens, na, the business continues. So most of the businesses you would find that they are all working on this basis only. And this is a very good basis of working even. That every business works upon the basis of credit because this facilitates their purchases and sales. So in this case, what would be the answer? The correct answer is going to be to facilitate the purchase and sale of goods on the deferred payment basis. Now, in a credit transaction, who is the person that draws the bills of exchange? Drawee, payee, drawer, endorser. Acha, endorser is the person to, okay, we talked about seller B na? We talked about seller B giving his bill to seller to his creditor C. So the seller B gave his bill to C. So technically, this is the one who's endorsing, who is transferring or selling his bill. In this case, he's the endorser. In this case, he's the endorser, while the creditor is endorsee. So that's the entire story. Who's the person who draws the bills of exchange, everyone? The one who draws the bill is drawer. Our seller is drawing the bill on the buyer that I order you to pay so much amount of money after so much amount of time. You don't have an option. You will have to pay. Now, what will the drawer do? He will say, okay, I'll pay you after this much amount of time. Either you pay me or the person whom I order you to pay. And the person whom I can order is pay. Right? So these are the various parties. The answer is drawer. Drawer in this case, he draws the bill. He draws the bill on these people. So this becomes drawee. Now comes, according to the definition, what are the essential characteristics of the bill? of exchange. Unconditional order, payment on demand and three parties. Conditional order, payment on fixed date and four parties. Unconditional order, payment on fixed date and three parties. Conditional order, payment on demand and two parties. When we define this specific area according to the definition, which is basically, acha, in this case, there is no condition. One particular thing can be a hint for you. There is an unconditional order. This will happen, that will happen, then we'll pay. No, they don't talk like this. It's an unconditional order. So can I say that at least these conditionals are over? There's an unconditional order, and then payment is normally on a specific date. There are bills payable on demand as well, but normally there's a fixed date and there are three parties: drawer, drawee, payee. So in this case, the correct answer would be C. Unconditional order, payment on a fixed date, and three parties. Okay. What are the most commonly used instruments of credit mentioned? Acha, what are the most common credit instruments, everyone, that are used? Is it checks and invoices? Is it the area of promissory notes? Is it the bills of exchange or bills of exchange and promissory notes? Checks and invoices, though checks is also one of the negotiable instruments, but this is not used on credit. The back date or future date checks are normally not that much used. It is used widely, but the popularity of it is not that much as of the bills of exchange and promissory notes is used. So both of these are strongly used, but if I look at the legality now, bills of exchange has more strength. It has more strength in terms of the suing of the other person. It is easier. Bills of exchange is somehow a little stronger in terms of working than the promissory note. Promissory note can also be used. It is also conclusive proof that one particular party has to pay to another. But in terms of legality or legal recognition, it is more of bills of exchange. Okay? What is the key distinction between the bills of exchange and promissory note regarding acceptance? Acceptance is necessary in both. Acceptance is necessary only for bills of exchange or necessary only for primary promissory notes, or acceptance is not required. Acceptance is the particular person to whom it is given, then that particular person has to agree ki yes, I am supposed to pay you this much amount of money after this much amount of time. The difference, the one of the major differences under bills of exchange and promissory notice, bills of exchange is an order. I order you to pay so much amount of money after so much amount of time. While if I talk about promissory note, everyone, this is I promise to pay you this much amount of money after this much amount of time. So this is the particular difference. When I order you, then what will happen? It is your decision. What are you going to do? Okay, you will have to agree only. Then I can ask you na ki whether this is true or not, isn't it? So technically, in this case, in one case we have an order, while in the other case we don't have an order. So in this case, the correct answer would be the bills of exchange has to be shown an acceptance. I am ordering you. You have to accept the order now. Only then the execution of the order can be done. So technically, the acceptance is necessary only for the bills of exchange. Done. One who typically makes the promissory note according to the information. Promissory note is normally made. Promissory note is the person who's saying, I promise you to pay this much amount of money after this much amount of time. That is your debtor. He says, I owe you so and so amount of money. I will pay you. So technically, the name is debtor. Okay. So the debtor is the person who would agree to the fact that yes, I am supposed to pay you this much amount of money. And in context of the bills of exchange, what is the role of notary public upon dishonor? Acha, normally there is no issue. Matlab, there is a person who says, I order you to pay. The other person says, Acha ji, I'll pay you this much amount of money. He pays, and then the promissory note or the bills of exchange, in both the cases, it's done. But what if the party who is supposed to pay, it says, I cannot pay you? Now, the point is, this is dishonor of a bill. When a person who's supposed to pay you does not pay, what can you do? You have got a legal paper, no? You have got a legal paper in your hand that yes, both of you were a party to this particular agreement and you have seen the particular thing. It is legal. So then what will you do? You'll drag him to the court. But first of all, you just have to get it acknowledged that yes, the bill has been dishonored. The particular person has disagreed with the fact that he'll pay in future. So noting is not necessary. Notary public ensures acceptance. Notary public notes the dishonor. Notary public approves the payment. In this case, what would be the answer? In this case, the answer would be he notes down the dishonor. Answer is C. He will have to note down that yes, there is a dishonor. And everyone, for the accounting purposes, how are bills receivable and bills payable treated? Both are treated as assets. Both receivables is an asset, bills payable is a liability. Both treated as a liability. Bills receivable is a liability, while bills payable is an asset. When we talk about how are bills receivable and bills payable treated, okay, BR and BP now. One is BR and one is BP. Bills receivable means we have to receive money from someone. Technically, this is an asset. We are chilling that someone is supposed to pay to me. So I'll be in a relaxed mode. Ki, theek hai, the other person has to pay me. He is supposed to pay me. And then we have bills payable. When I have to pay to someone. So it's a stress. So in this case, the correct answer would be bills receivable is an asset and bills payable is a liability. Let's go on. According to the section 6 of the Negotiable Instrument Act, what is the key characteristic of a check? It must be payable on a fixed future date. It must be drawn on a specified banker. It requires acceptance by the drawer. It is always payable to order. Now, in this case, what's the answer? According to Section 6 of Negotiable Instrument Act, what is the key characteristics of a check? Check is what? Check is basically an order to your banker that he should pay certain amount of money to someone withdrawn from your bank. So this is basically it must be drawn on a specified banker. Okay. So in this case, the correct answer is going to be the specified banker. Okay. What must a check fulfill in addition to being payable on demand? It must be payable on order. It must not be drawn or specified banker. Then it must have a fixed future payment date. It must fulfill all the elements of bills of exchange. वैसे तो it is already a negotiable instrument. When we talk about the checks, check is also treated as a negotiable instrument. So technically, it must fulfill all the elements of bills of exchange. ठीक है, to being payable on demand. Payable on demand means as and when people are going to ask you for money, you are supposed to pay. Then the answer is D. It must fulfill all the essentials of a bills of exchange. What is the key distinction between the bills of exchange and a check regarding acceptance? A bills of exchange requires acceptance, check does not. A check requires acceptance, bills of exchange does not. Both bills and exchange check require acceptance, or neither of them requires an acceptance. When you issue a particular check on someone, there is no acceptance. It is given by you only. You have given the order, take out money from my bank account. So in this case, the check does not require an acceptance. Okay, so the answer is a check does not require any acceptance. Which statement regarding the term of a bill is accurate? The term of bill is always expressed in days. The term of bill is equivalent to its date. The term of bill is called grace period. The term of a bill is calculated by subtracting 3 days from grace from the actual period. The answer is whatever time period is. Then you, if you're the actual period that have taken. So 3 days are for grace, and this was the actual time tenure for which this bill was issued. So the answer is actually D, everyone. And okay, so let's end the session here, everyone. Please share this session among your peers, and at the same time, if you like this session, then go ahead and like the same as well. Like the same, and if you haven't subscribed the channel yet, then do it the same as early as possible. Okay, everyone. So that's how I'm starting with my session today. As you already know, this is our series in which we are covering the entire modules unit by unit. Till now, I am done with 9 units already. I'm done with eight units from 1 to 8, and I'm currently covering unit number 9 and left with 10th and 11th that will be covered in the upcoming days as well. So this is unit number 9, that is operational aspects of accounting entries that we have started with. Okay, this is something I would say for all the bankers. This is an easier one. Why do I say this? Because you do this every single day, don't you? Anybody is depositing money, the same is entered. Excuse me. Anybody's taking out money, the same is also entered. So all those things are definitely there now. So when all these things are there in your books of accounts and you practically saw it, then that is what we call the operational aspects. In this era, they are not covering anything else, but they are just covering the fact that we deposit the money and withdraw money. There, this was related to the area of debit and credit again, but from the point of view of the passbook, right? So there are terms regarding vouchers as well, because if I'm depositing money, where's the proof? If you are taking out money, then where's the proof, right? Okay, so that's all about that particular part. Now the next point that we're going to talk about is that our JIIB new season sale is on. That simply means currently you have an opportunity to get double validity as well as 81% discount. If you go through our website, you will find 81% discount is available. And for that, you can use the code Y541. By using this specific code, you will get our JIB CIB classes at 81% discount. And if you're looking forward towards Mahapacks, it is available at double validity. Buy it for 6 months, you get for 12. Get it for 12 months, you get for 24. So that particular benefit is available. So go ahead and check it out on our website or in our app for further details. Till then, let's officially begin this particular topic. What's the name of the topic, everyone? The name of the topic is operational aspects. So when we talk about the operational aspects, what does it cover? This particular topic covers only and only one thing, that is it covers a specific topic of operational aspects only. Operational aspects from the point of view of a bank. That according to them, how does a bank receives money? How do people deposit money, and what's the impact of the same? Okay, now let's talk about just a few basic transactions here. In terms of the bank, now there are certain transactions which are done. A few are called cash, and some are called non-cash. What's the difference? In terms of cash, there is a movement of cash incoming or outgoing, while in terms of the non-cash, it is also called transfer entries or transfer transactions. In this, you will transfer from one particular area to another particular area. That is basically an internal movement, right? And to record everything, matlab if there's any movement, if there's anything that is happening, where's the proof? You're looking forward to what's the proof of the same now. Then to review the particular portion and to show it to the even auditors कि ठीक है, we are doing that particular transaction now, we will prepare vouchers. Then everyone, so in this case, the second important term that comes is vouchers. If we talk about the area of vouchers, what are vouchers? The vouchers are basically a document proof of the transactions being done in the organization. In this case, you will find that vouchers based upon the transactions can be of two types. One is called debit and the other one is called credit. Okay. So we have these two kinds of vouchers, that is debit voucher as well as the credit voucher. And when we talk about the debit voucher, it would include check issued by the customers. People are withdrawing money from the bank now. So basically, the withdraw is basically a part of it. And then says deposit transactions and the withdrawal transactions, they are recorded accordingly. Now comes the next point. Now, there are certain transactions which are going to include both. They have both debit and credit. If they have both debit and credit, then it is called a composite voucher. A voucher which has both types, that is debit as well as credit. Okay? These are operational aspects of accounting entries. Okay, now as I told you the brief information of the operational aspects of accounting, now let's move on and do a few MCQs regarding the same. Okay, what is the ultimate objective of recording financial transactions in every business? Why do you record all those financial transactions? To create a journal, to prepare vouchers, to prepare balance sheet and P&L, or to reconcile bank statements? There is one particular thing. Technically, you do all these things. On a genuine note, you create a journal. Yes, you do. Then you prepare vouchers of the same as well. Vouchers are basically the documentational proof ki yeah, this particular transaction is being done, we need to record it. And to reconcile bank statements, when you have vouchers ready, when you have your transactions written down, it is very easy to trace down whether the particular transaction that we are talking about, was it really a genuine one? Was it actually a real transaction? Then are these transactions having a proof there, because the term objectivity comes into this concept. It is not given in our book in terms of the IIBF book. They haven't stated it as a principle, but this is also a very important principle of objectivity. For example, when there is an audit, you are always asked for proofs. An auditor will not leave till the time he has a documentational proof or a statement from your side that this particular transaction is backed up with this specific statement. It is so important. So technically all these things are important, but the ultimate aim is none of these. The ultimate aim is to prepare the balance sheet and the P&L, because this is required to provide true and fair view of the books of accounts. Most of the banks, I think if you look at it, then banks is basically a place where public money is involved. So the stakeholders can be badly impacted if the banks are involved in any kind of frauds. And in case the banks faces any loss due to any third party's frauds even, it is going to impact the stakeholders only because their money is involved in these kind of organizations. Okay, so that's what we specify in terms of the stakeholders. Okay, what is a peculiar feature of accounting entries in the banks? Entries are first entered in journal and then in ledger. Entries are standalone with no corresponding entry. Entries are first entered in ledger accounts, then in journal. Entries do not require authentication. Okay, when we look at the peculiar feature of accounting entries in specifically the banks, uh, we prepare a specific area that is called ledger. We have general ledger and we have specific ledgers as well. So we take all those things directly into that area, and from there it is prepared into the journal format as well. Matlab, first of all, if it belongs to a specific person's account, it is recorded in that particular account, and it also goes into the area of general transactions. This transaction has happened during the particular day. So basically, first of all, it enters the ledger. Now, this is different from what we do in normal life. While in a normal business, you will always find they start from journal, then they reach to the area of ledger. While in terms of the operational aspects of banks, it doesn't work that way. How does it work? In terms of a bank, you will always find they are having a ledger, and from that ledger, they create a journal. And everyone got the idea? Acha, if the session has been proving out to be helpful for you, then please share this, and at the same time go ahead and save the playlist of this particular area, so that by the time you will be reaching the examination time, all the videos of this particular series is all saved up for you, so that you don't have to worry about, acha, I have to collect all those things for AFM by the time the examination is sitting. You will have a better situation then. Okay. Since had always been, I had also been through the situation where I was also a student. So there you realize that it is always better to compile and systematically keep all the notes that you need for the exam. It shouldn't be like just a few days before the examination you are finalizing things, or on the last day when you are basically very stressed out. Ki what should I do about my classes? Acha, which particular batch I should watch, and what should I do at this point of time? That particular thing never helps. So you should be absolutely clear about the fact what you want to do. Okay? Acha. What type of system do banks use for accounting entries? Now, single entry system, triple entry, double entry, or quadruple entry. In accounting system, we have only two kinds of systems, single entry and double entry. In this case, the method that we are going to use is double entry system of bookkeeping. Okay, banks use double entry system of bookkeeping where we have credit and debit entries and has one more corresponding debit and credit entries. That means if there is a debit side, you will always find a counterparty credit. If there is a credit side, you will always find a counter debit. So basically that's how we define a double entry system of bookkeeping. Acha, what is the term used for accounting procedure where vouchers are straight away posted to individual accounts in subsidiary ledgers in the banks? Okay, we are looking at the vouchers are taken directly to the subsidiary. That is, subsidiary ledgers are basically the additional ledgers, right? Where there is one particular area of primary, and these are additional ones. So when we look at the subsidiary ledgers, it is voucher authorization, journal posting, ledger recording, or voucher posting. Everybody, what's going to be the answer in this case? We're talking about the term which is used for the accounting procedure. Okay, there is one particular thing that in terms of audit is highly important, that is voucher. Always remember, in terms of audits, we have always been very particular about the fact, I'd been into auditing the firms and all. I'd been into auditing of the banks. So when I was looking forward towards the bank audits, now there was one particular thing that was asked for from the clients first. That is, we have always asked for the vouchers. Okay, first of all, provide us the vouchers for this particular month, because if you're going for the concurrent audit, you need it for every single month separately, starting from their TDS returns, from their vouchers, then their cash audit. All those things have to be taken up during that particular period. You know, plus a specific view on the NPAs, locker rent, whether charged or not, and what is the particular portion of the interest accrual if it is that particular quarterly month where you have to capitalize and give it to them. So all those minute details has to be captured in terms of this area. And what is the conclusive proof of it? It is always a voucher posting. Okay, na? These vouchers becomes a solid reason due to which we are working on the entire scenario. Right? Chali. So that is voucher posting. Banks follow the accounting procedure of voucher posting where vouchers are directly posted to individual accounts in subsidiary ledgers. Okay. What is the emphasis in banks concerning books of primary entry and ledgers? Equal emphasis on both, more emphasis on books of primary entry, more emphasis on ledgers, or no emphasis on either. We are looking at the point, what is the emphasis in banks? Acha, what particular thing is more important for the banks? You will say prime entry is more important or the ledgers. Okay, everybody, when we talk about the posting and everything, na, one of the most important elements is always the ledgers. The ledgers are more important, specifically the ones which are related to a specific account and all. Na? So basically, what is more important is whether the amount is actually going to your account or not. For example, there was an account number. The name of the bank is A, B, C, then 000, and then we can say 1, 2, 4, 7, 5, 6, 7, 8, 9. This specific account number is super important. Think about it. If this is posted in the journal area properly and this is not posted in his account, rather it is posted into 1, 2, 4, 5, 6, 7, 8, 8. That is going wrong, which is of no use. So there is more emphasis on the ledgers. If the specific ledgers are correct now, then things are very, very different. Then things are in a better situation. So in this case, the right answer comes out to be more emphasis on ledgers. In banks, relatively lesser emphasis is placed on the books of primary entry. It is not that important. But yeah, in maintaining accurate ledgers, it's super important because people are going to check their accounts. I will check how much money is there in my bank account, how much money I'm taking out. It is super duper important. Now comes which of the following is a type of debit voucher used in the banks? Salary payment, then comes interest payment, then comes draft issued by the branch, and dividend warrant. What would be the answer in this case, everyone? Which of the following is a type of debit voucher? Which of the following is a type of debit voucher? Anything where you will always find there's a reduction in the value of that particular account. Only that would be a part of it. Okay, salary payment is credited into the accounts. You always see that message now, salary being credited into our account. That is salary payment. Then interest payment, it is also, we will assume that it is the payment. The use in banks now, it is giving us the payment of interest. So this is also a plus point. This is also a great point. Dividend warrant, again, you are getting something. Again, it's going to be on your credit side. The draft issued by the branch, that would be a debit one. Okay, so there is only one debit voucher because drafts issued by the branch are a type of debit voucher in the banks. Okay, everyone, there are three kinds of vouchers. I hope we have done this part just in the beginning. So repeating it again, that is debit voucher where one part is debit. Then we have credit voucher where one part is credit. And where both are there, it is called composite. Okay, so these are the various types of vouchers: debit voucher, credit voucher, and composite voucher, where you will find both debit and credit items being included. Okay, in the book they have given examples of debit voucher, credit voucher, as well as composite. So what can happen is they can actually give you a specific question: identify among the following which particular the thing belongs to debit voucher, credit voucher, or composite voucher. Those kind of match the following questions can also come up. ठीक है ना? अच्छा, now look at this. What is the term for vouchers that contain both debit and credit entries in different accounts? Okay, now look at this. This is single entry voucher, composite voucher, dual voucher, or balance voucher. We have just talked about this area. When we talk about it has both the debit as well as credit, it is going to be the composite voucher. Okay, vouchers that contain both the debit and credit to a different account are called the composite vouchers. That simply means nothing doesn't mean this area doesn't mean the debit and the credit are going to be in the same area. It is going to be in a different set of accounts. Okay, now the banks follow the accounting procedure of voucher posting under which of the vouchers are. The first posted to the general ledger, then to the individual accounts, straight away posted to the individual accounts into the subsidiary in the subsidiary ledger, or first posted in daybook and then in subsidiary ledger, or none of the above. If there's any transaction that I'm doing in my accounts, there is one particular thing I have to remember. It has to, if I deposit 10,000 rupees in my account, it has to be reflected in my account as soon as I've deposited. Now, so when I'm standing in the queue, as soon as I've deposited, move back and I've received the message the amount has been credited to your account. Technically, this thing happens now. That simply means this 10,000 straight away it goes to the individual accounts because I want to know what is my current balance. Rest everything is a secondary issue, but I want to know what is the current balance, and that particular thing is required in terms of the learning in a proper way. Okay, na? Done, everyone? Got the idea? Chaliye. Now comes the next question. Which one of the following is not a debit voucher? Challans for deposits into accounts for central and state government, checks issued by the customer, then drafts issued by other branches to be payable at the branch, and term deposit receipts presented for payment. In this case, most of the areas we are taking the money out of our bank account. Only one point is there when we are basically not taking out the bank account money, we are actually putting more money. That is A, the challans for deposit into the CGNST. Okay, because that is increasing their account balance. Acha, which one of the following is not a credit voucher? Pay in slip filled by the customers for deposit of amount of in their accounts, application for issue of term deposits, voucher prepared by the branch as its printed stationery which is authorized by the bank official, and then letter of authority signed by the customer containing standing instructions. What would be the point where it is not treated as a credit voucher? Acha, in this case, the answer is D, everyone. The letter of authority doesn't state anything. Sometimes the letter of authority can be related to the standing instructions ki theek hai, after certain period of time you deduct this much amount of money from my bank account. theek hai, it is just a standing instruction ki theek hai, you take the money out of it. This is just an authority letter, not actually money is going out right now. At the time it's not going out, we cannot determine it as a voucher. So the letter of authority signed by the customer containing standing instructions. Okay. Acha, which of the following statements is or are not correct about the accounting system in the banks? Accounting systems of different banks vary in terms of nature of transactions. Software used in accounting system do not differ among the different banks. The accounting system in the bank is designed keeping in view the nature and volume of operations, and all of the above statements are correct. What's correct, everyone? Which of the following statements is or are not correct about the accounting system? In terms of accounting system, the software used do not differ. I think this is what I've seen in almost every third bank, because we are into this field from quite a long time. I've seen so many JIB and CIB bankers. Um, there most of the banks, they are ऐसा नहीं है कि they're all the same, and ऐसा भी नहीं है it is all totally different. But yes, every bank has their own set of softwares which they are using. So the accounting system is not the uniform or bilkul, it is not totally same, right? So there are banks where you are using actually bank software, then they are using Finacle as well. So there are different softwares which are being used by the organizations, right? Hello everyone, welcome to Offices 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the area of AFM. Okay everyone, we had started talking about the topic of bills of exchange, so I'm continuing it further today. So let's talk about it in detail. When we talk about this particular topic, uh, bills of exchange is something which is a negotiable instrument where one party would issue it to another party, and the party which is issuing is giving an order to the other party that I order you to pay me this much amount of money after this much amount of time. So I am ordering the other person, and I can give that right to receive money to someone else as well. So I'll sell it as and when I want to. So basically, the entire process is determined like this. Acha, everybody, our JIB, CIB new season sale is on. So if you haven't checked it out yet, then go ahead and check it out as early as possible, because this is definitely for a very limited period. 81% off if you use the code Y541, right? So utilize this particular code and get the discount and get enrolled in our JIB CIB batches as early as possible. Right. Chali, you can review the same on our website or in our app for further details. I'll discuss where to go exactly by the end of the session. So till then, stay tuned. If you haven't liked this particular session yet, then please go ahead and check it out and go ahead and like it as well. The playlist of this particular era of AFM is already added. So what you can do is you can check out the entire playlist, and if it is helping you, then don't forget to like each and every video. Along with this, go ahead and subscribe to our channel so that you get the notifications regarding my classes along with the other batches of JIB as well. Okay, so that's all about the various areas. Now let's come to the topic which we have started. This is a particular topic of module A, that is known as bills of exchange. Now, continuing further, when we talk about the bills of exchange, A quick recap. We did this part in the previous class itself, so I'm just going to give you an overview about it, what exactly it is. When we talk about the bills of exchange, there is one party which will acknowledge the fact to the other party that they are paying the money to the seller. If A promises B, I promise you to pay this much amount of money after this much amount of time. That's called a promissory note. And we have a bills of exchange where one party orders the other party. That is, I order you to pay this much amount of money after this much amount of time. So that's the difference between party A and party B. Okay, now comes the drawer, drawee and pay. We talked about it. This is the person who issues the bill. The person who to whom the bill is issued is drawee, and the person to whom the payment is made is pay, right? So here comes the first question, everyone. What is the purpose of accommodation bill? To facilitate trade transaction, to raise money without selling or buying goods when any one or both the parties are in need of funds, to finance actual purchase or sale of goods, or none of the above. What's going to be the correct answer, everyone? Basically, na, there are two parties. Let me tell you what exactly accommodation bill looks like. There are two parties, A and B. They are friends and they both need a total amount of 10,000 rupees, where A needs 6,000 and B needs 4,000. Due to their need of money, what will they do? This particular 10,000 rupees, uh, none of them have any security. They do not have anything where they can take a loan or something and help it out in that way. So they're just stuck with it. So what are they doing? This 10,000 will right now go to the area of they have tried everything, whatever they could do. Now the point is, both of them are in need of this 10,000. They just go to the bank and A issues a bills of exchange in the name of B. Matlab, since they know each other, they're just trying to help each other. So A has a bill receivable against B for rupees, say 12,000. Because technically, if the bill is for 12,000, if you sell it for 12,000 from the bank, he receives 12,000 from the other party, then what's the fun? The point is, what is bank making out of it? The bank will buy the bill for 11 and will receive 12 from the B. That makes a better sense. So that's why you have to remember there would be a cut from the bank as well. So in this case, can we say that 2000 would be the price at which the A will get the discount? Matlab, the bank says that I will buy the bill for rupees 10,000. Now the bank will give the 10,000 rupees to A. A got that? कि ठीक है, I am receiving 10,000 rupees. As soon as A receives these 10,000 rupees, what is it going to do then? Once A receives this 10,000 rupees, then what will it do? It will now share that 10,000 with B. After 3 months, both of them would combine their money, and this entire 6 plus 4, 10,000 rupees would be paid by B to the bank. Such a case where none of the party owes anything to anybody. They're just trying to help each other by creating an asset which is ultimately sold to the bank is termed as accommodation bill. So in this case, the correct answer is actually B. Done, everyone? That is to raise money without selling or buying goods any one or both parties are in need of funds. Okay, here comes the next point. On 1/1/2022, X draws a bill on Y for 40,000 for 3 months. Everybody, when they talk about days, then you need to be very precise. But when it talks about the month, just change the month. If the first month was 1/1/2022, then the next would be 1/2/2022. This is the second month, है ना? This is completion of 1 month. Then we have completion of second month. Then we have completion of third month. It completes on 01/04/2022. The maturity period, the period after which the particular person becomes the which is due to make the payment is 1/4/2022. But there is one particular line regarding the bills of exchange. Whatever your due time is, you have to add 3 days grace to it. So if it's gonna be 1/4/2022, then for this 1/4/2022, just add 3 more days. The correct answer will come out to be 4/4/2022. With whatever time tenure you are having, that is the exact number of months or exact number of days, whatever is given, you have to give 3 days grace to everyone. Okay, this particular grace period is given to everybody there. That's a specific rule. Done, everyone? Chaliye. Then let's move on. Acha, what do you mean by noting charges, everyone? Okay, now let's talk about the noting charges as well. Sometimes one party would issue the bill to the other party that I order you to pay this much amount of money after this much amount of time. All that thing is already sorted. Then what will happen? They will have to pay some charges called noting charges in case the party fails to pay the money. That means if there's any failure in terms of payment, then you are supposed to pay the noting charges, because you have to get it to the bank and then you have to get it acknowledged ki yes, when we talk about the amount or inability of the particular buyer to pay off the money is there, then only we can go ahead and pursue the case in the court further, right? So in this case, when we talk about noting charges, it is nothing but just an acknowledgement of the fact that yes, there is a dishonor, right? Now, when we are talking about the area of noting charges, it is paid to the bank for dishonor, it is paid to the drawer for dishonor, it is paid to the notary public for dishonor, or none of the above. So, in this case, it is paid to the notary. We are getting it acknowledged from the court itself that yes, we are supposed to pay a certain amount of money after the person was supposed to pay this much amount of money, but he hasn't paid. So technically, this is just an acknowledgement. It's a proof that yes, the particular person was supposed to pay and he didn't pay. Okay? Then it is paid to the notary public for recording the dishonor. And always remember, noting charges are paid by the holder of the bill. Then paid by holder of the bill. That's what we define as the notary charges. Done, everyone? Then comes, which one of the following is not true? What's not true, everyone? There is no appearance between trade and commodation bill. The bills of exchange must be accepted, or the bill and the creditor or draws up bills on debtor. This is also correct. When we look at the entire, there's only one thing wrong. That is, drawee is not the maker of the bill. We have three parties now: drawer, drawee, and pay. Now, among these parties, which is the party which is going to issue the bill? When we look at the party which is going to issue the bill is the drawer. Issues the bills of exchange against someone. Done. So when we talk about the bills of exchange, there sometimes the bills of exchange are held by them only, sometimes it is held by the bank. So this is how they record it in their books of accounts that yes, we are supposed to receive money from so and so after so and so time period. And this is always treated as a short term relationship. Done, everyone? Now comes the next question. Which of the following is true? An insolvent is a person from whom some portion of the debt is recoverable. Drawer drags the drawee to the court in case of dishonor of accommodation bill. Then we have when the due date of the bill falls on the public holiday. It is payable on the earlier working day. No, that's not correct. One of the basic things regarding the dressing up of this particular bills of exchange, if we talk about this particular bills of exchange, this in case there is a public holiday, then you already know that this particular day is going to be public holiday, so you will receive the money on the very next day after this. That means if there is a working day, it was a working day, for example, the particular last day is basically following on 26th of January. So we will consider the last day of the due date, that we call it, is not going to be 26th. It's going to be 25th. That means a day before. Okay. So the due date of the bill falls on a public holiday. Then what will happen is it has been already defined. Then you go back. If it isn't further, that means it is something which is related to the era of the normal holiday, or you can say if it's an ad hoc holiday, then for the ad hoc holidays you can go further, but if it is a planned holiday, then you have to go back. Okay, one particular day. So which one is true in this case? The correct answer is when the due date of the bill falls on the public holiday, it is payable on a previous working day. Chaliye, let's continue further, everyone. Which of the following is the correct journal entry when A discounts the bill before the due date? 4 rupees 9800. Matlab, probably I received 9800 while the bill would have been of 10,000. So technically, in this case, what happens is, uh, what is journal entry? Mr. A discounts the bill. Mr. A is discounting the bill. Matlab, it is selling the bill to the bank. Either he'll receive cash or either he'll receive discount. है ना? In this case, there is only one rule: debit what comes in, credit what goes out. So if I look at that point of view as well, cash account is already, cash account is the amount that you are receiving in the in terms of the bills of exchange. And what are you losing? You are losing your bills receivable, the right to receive money over others, right? So in this case, you receive 9800 rupees. So you will receive a cash of 9800, but the bills receivable that is gone out of your hand is still of 10,000. So what will you do? You will remain, you will look forward towards the area of, see, this was for 10,000. I what for, uh, it was, we have got it for 9800. That means the remaining amount, that is discount, loss when we talk about it. And in this case, it is rupees 200. That is our discounting charges. And so look at the particular answers. Is it 9800, 10 or 200? What would be the answer in this case? Always remember, cash account and debit account both are debit the receiver, credit the giver. So if we receive anything from a particular person, we'll be adding it up. If we don't like someone, then when we talk about this particular bills of exchange, it is always given to someone to whom we do not know about. So technically, what will we do? We will create a, we will create a balance in the entire working. So when we talk about this, you will receive money now. So that technically you are getting 9800. Then then the next point that arises is that if I look at the point of view of the entire journal entry, Discounting is where the particular person doesn't have money, so it will go to the bank, sell off its particular asset, get money, and utilize it in their business or their houses, whatever the particular requirement would be. So technically you are getting cash 9800 rupees, then you are losing your bill receivable, because you were supposed to receive money after so and so amount of time, but you sold the same to the bank and reduced your chances of getting that particular thing. So in this case, the correct answer would come out to be cash. You're receiving 9800, but there you are also having a discount. You had to give them, and then the bills receivable. The money to receive is gone. Then everyone. So now let's move on to the next question. The next question says that if a journal entry is correct when A sends the bill to the bank for collection. Bank for collection means I am holding the bill. I'm not selling it to the bank, but I'm asking it to deposit the money on my behalf. Bank collection is basically to deposit the money on behalf of someone else. So it is going to their accounts only. Done. So in this case, what would be the answer, everyone? Bank account debited. We have lost the right to receive money because we have given the right to receive money uh, uh, to the particular organization. When we talk about it, the organization has done this. That if I'm holding a bill against someone, say Mr. N, I am holding a bills of exchange against him, and in this case, if I would like to recover the money and I can do not do it on your own, then I will ask someone else to collect it, and that someone else's bank. The bank goes and collects the money, puts it in your account there, and that is what the bank will be taking care of. That is bill sent for collection. So we are losing our bill sent for collection, but at the same time, it is helping us to get rid of a particular headache of collecting the money. So technically, you will receive money and you will lose your bills receivable, right? So when you lose your bills receivable, what would be the journal entry? It would be bank for bill sent for collection to bills receivable, because what you receive is the right from the bank, and what you have lost is being bill receivable. Okay, this is called bills of exchange. Now comes the next question. What is the correct journal entry when the retained bill is dishonored and the noting charges are paid in cash? If your retained bill is dishonored, the bill that you are holding is dishonored. So what will happen? First of all, you will have to pay the noting charges, and then whosoever is the debtor, you will be yelling at him ki what you gave was not correct because the particular person didn't pay and you don't have the money to pay. That simply means in this case the organization is going to make the arrangement to get it done through the notary that this particular thing has happened, that the bill that we kept with us has been dishonored. In this case, what would be the answer? Bill receivable, noting charges, cash account debit, and B. Acha, the bill is retained, so that means we are having the bills in our hand only. In this case, when we talk about the bill that has been retained, in this case, the correct answer comes out to be the bills receivable that we have is there at for rupees 10,000. The noting charges are of rupees 100. That means the amount that should be paid is 10,100, because the organization is facing a little trouble as the bill receivable, the money to receive, the right to receive money has been gone. And when we talk about the bills payable, it was slowly and steadily uh, such kind of liabilities bring burdens to the owners because they have to pay it. So if they have to pay, that bills payable is basically the amount we are supposed to pay. For example, you are the drawer, I am the drawee to whom this particular bill is given. So I'll have to do the work as early as possible. Then the question says that what if the bill is dishonored? That means I thought I have got a bill receivable, but no, that bill receivable is fraud. So if it was on the debit side, it is on the credit side now. So we are losing our bill receivable, and what we are gaining, we are just collecting the information regarding the dishonor. So the particular person who was supposed to pay, he is bill receivable there, and the entire portion of the working there is shown in this way, that that noting charges means acknowledgement of the dishonor. Ki yes, there has been a dishonor, and you will have to pay the cash because the remaining is still left, along with 10,100, the overall amount which is subjected to the entire amount that the company had spent in order to recover the amount, right? So in this case, in this case, the answer is bills receivable account debit 10,000. Then the noting charges 100 rupees. That is paid in cash. So to cash 100 rupees. And then we have the bills receivable is gone. For the person there, then the person would be tagged. In this case, the correct answer comes out to be 10,100. And that is the answer there. Welcome to Officer 24/7. My name is Niharika Valia Bhatnagar, and I am with you with the era of AFM. Okay, everyone, we have done a lot of topics already. So, what are we going to talk about today? Uh, we are at unit number 10 of this particular module A. That means just the last chapter is left regarding the module A. Rest everything is already done. Plus point, if you are going through the classes every single day, then you must have seen that most of the topics are already done by you in terms of module A. And in this case, just save the entire playlist so that you have the revision in a systematic manner when you will be having your examination. So that's the basic idea behind coming up with these kind of series, that you get to know what exactly you are dealing with, and you have some solid level study material which will help you to study on the last day. Because what everybody struggles is what to do on the last day of the examination. What are those things which we need to go through when the examination is approaching? Those basic things has to be matlab already decided. That's what one particular thing that I strongly believe in. Okay, now let's move on and talk about that specific topic. But before we proceed further, I hope you have reviewed our courses yet. If you haven't, then you must, because the sale is going on. It is there for a very limited period. It would be ending soon. So it's way better that you go ahead with it at the perfect time. The details regarding the same I'll be discussing by the end of the session. If you like this particular session, then go ahead and on the thumbs up and click on the area of subscribe channel as well, so that you get all the important information regarding the examination. Along with this, when we are talking about this examination, then this is for the May 2024 attempt and afterwards. So if you find this useful, then stay tuned and be there with me every evening. Okay. So let's continue, everyone. The questions that we're going to deal with are related to the area of back office functions or handling unreconciled entries in the banks. Acha, what do you mean by back office? Well, there's a front office and there's a back office. Now, the back office deals with what exactly? The back office is dealing with the entire area of the it is actually dealing with the entire working in such a way that it is related to the area of admin work, all the things related to the reconciliation of all the entries, and then where they're taking care of the uh, working related to the treasury management, all those things are covered in the back office functions, na? So we are going to look at different types of accounts, what is happening in those accounts, tracking of all those things is really important because front office is always involved in dealing with the customers, right? So let's quickly move on and talk about the various questions related to this particular topic. Okay, here comes the first question. What is the primary responsibility of the back office in bookkeeping? Is it sales and servicing? Is it transaction processing and general ledger maintenance? Then marketing strategies or front office reconciliation? What do they do, everyone? When we're talking about what is the primary responsibility of the back office, their primary responsibility is to track the processing, and they also go through the general ledger maintenance. This is what they maintain. Matlab, they are looking at the back end entire working, whatever is happening with the transactions, and they are also looking at the general ledger maintenance. Okay. What is the back office responsible for in deposit related functions? Loan originations, then internet banking transactions, calculation and posting of interest or credit risk management. Okay, so we're talking about the sorry, the back office in terms of deposit related. They are looking at calculation and posting of interest. How are they looking at it? For example, if you look at the FDs, RDs, है ना, so they calculate the interest. It is always done by the core banking solution. CBS goes through that, and then it takes care of the entire working further. So the answer is calculation and posting of interest. Okay. Now, which of the following is a part of the back office role in loans? Internet banking, loan origination, credit card issuance, or front office sales? Which basically work? Front office sales is out because that is a work of the front office. So we can keep it out of this window. You know? Then what does it take care of it? In terms of loans, the issuance of the loans, their agreement, their entire hypothecation process and everything is taken care from this particular area or back office itself. So they are taking care of the loan origination. Okay? So the answer is loan origination. Now, what is the key responsibility of the back office in regulatory compliance? Marketing strategies, identifying KYC gaps, or loan origination, or front office the reconciliation. Acha, front office reconciliation, as we already know, this is not their part. But what are they looking at? In terms of regulatory compliance, what do they do? See, someone is taking a loan. They have deposited their papers through it to them. Now, if I have deposited my papers, and they will have to review it, na? Ki what is happening in those things? What are we going to do about it, right? So, regulatory compliance, it is to the area of the documents which I'm submitting, are they true or not? The authorization of the same. So, all those important things are to be taken care of. So, what is the key responsibility of the back office? The key responsibility is to find out the know your customer gaps. Know your customer gaps are really important because if the KYC is not done, I think at this point of time, as a customer, I've always seen that the once the KYC is not done, your accounts are not going to work smoothly. One or the other problem will arise while going through the internet transactions or even through apps. So basically, for that you need your KYC done, right? So the regulatory compliance in terms of the KYC is the responsibility of the back office, right? Okay. Now, here comes the next question, everyone. What is the primary concern addressed by reconciliation in electronic payment transactions involving intermediaries? Delay in customer payments, ensuring timely adjustment of reconciliation entries, centralized monitoring of ATM or currency exchange rates. What is the primary concern? One of the most important concerns related to the area of electronic payment. Okay, what happens is if I've just made an IMPS, in IMPS, the payment has to be reflected. Na? In IMPS, it has to be shown right away, right? So if this thing is going to happen, then we need to ensure timely adjustment of the reconciliation entries because the person is going to, but now Every person wants to know their real time balance. What is the balance that we are having right now? And how do we deal with that balance? So basically, we need that clarity now. That comes with point number B. This is the part of the back office. They're sitting at the back office and they're making sure whatever entries are being done, the reconciliation of the same is done, so that each and every intermediary is going to make sure that when there are multiple parties involved now, the back end will always make sure that there is no gap between transactions and what is being shown there. So it has to be shown in real time in the accurate thing. So that is ensuring the timely adjustment of the reconciliation. Okay? So that is ensuring timely adjustments of reconciliation entries. Now, what is the fundamental purpose of reconciling entries with correspondent banks? Monitoring ATM balance, agreement of traders' overnight positions, timely adjustment of reconciliation, or reconciliation of NOS-through accounts. What is the area where we are talking about? They're working with correspondent banks. When we are looking forward to other banks as well, then there is reconciliation of NOS-through accounts. Okay? So in this case, the correct answer is actually D, reconciliation of NOS-through accounts. Okay. Now comes the next point. Why do the banks engage in reconciliation with RBI and other institutions? Banks need to do this because what happens is, if there is any kind of error or gap between the information that we are looking forward to and what the other party is having, then frauds are very easy. I think the truth regarding the cyber threats which had been hitting up the market, they are there because sometimes the real time information gets affected, and before anybody can grab the exact information for this particular period of time, the time is gone. So that's one of the bad things that happen. So why do banks engage in reconciliation? They will do it for to centralize the monitoring of ATMs. You don't work with other institutions for ATMs, right? You There are certain ways of regulating your own RBI, your ATM systems. So reconcile entries for margin calls and futures trading. That is a very specified sector. Then, to ensure safe and orderly conduct of electronic payment, that can be done, or to reconcile intra-bank transactions. If I look at intra-branch, that is also there, but I would say they engage for RBI and another institutions reconciliation just to find out कि ठीक है ना, because when we are doing the electronic payment, we would like to know if my information is this, is the other party also having the same information or not. So basically, it is very important to ensure the safe and orderly conduct of electronic payment. Okay? So to ensure safe and orderly conduct of electronic payment transactions. Now, what is the key challenge in reconciliation of intra-branch entries? When we are having intra means within the branch entries are going on and subsystems are also existing. Then currency exchange rates, delay in customer payments, centralized monitoring of ATM balance for ensuring accuracy and consistency in records. Inter means between two, and when we talk about intra means within the specific branch. So the currency rate issue is basically there only in forex, you know. Then delay in customer payments that can affect you, but this is not something which I can say this is intra branch or subsystem there. Centralized monitoring of ATM, it is all centralized. That means everything is basically updated as soon as it happened. Then this particular thing ensures accuracy and consistency in records. So in this case, the correct answer is going to be ensuring accuracy and consistency of records. Okay, so that's the correct answer. Now comes the next part, everyone. Why has a reconciliation of inter-branch entries remained a concern? Why inter-branch means when we are having two specific branches. For example, we have branch A and we have branch B. Now, why has the entire process of interbranch entries remained a concern despite the advent of computers or currency exchange? Okay, audible now? So in this case, what are we talking about? Why has reconciliation of inter-branch entries remained a concern for the banks? See, inter-branch means we are having two separate branches of same bank, right? So the branches have to be synchronized in such a way that the information, for example, my home branch is somewhere else and I am taking out money from the bank, but from a different branch, when we are doing such a thing, then why has this reconciliation remained a concern? Why is it such a big concern? Due to customer repayment delay, that's not a problem there. Then, despite the advent of computers, computers are there, but the gaps have also, the fear of having gaps has also increased as well. Because sometimes there had been cyber frauds where the entire banking has been hit by it, right? Currency fluctuations are limited only to the forex areas, while the last point is centralized monitoring of ATMs. When we talk about centralized monitoring, what do we cover in this? Under centralized monitoring, we are saying that all the ATMs of that same bank will be synchronized in such a way. If I take money out from the branch A and I have my account in branch B, the entire information is given to them immediately. So in the entire banking system, in that entire bank, wherever I've tried to find out things, my entire information is completely updated without any hustle bustle. ठीक है, so basically you are just making sure that if we are looking at any branch na, everything is in a centralized format, right? Done, everyone? Chaliye then, let's move on and talk about the next question. In this case, the correct answer is uh, despite the advent of nahi, I think I might have to rephrase this question. Okay, we'll be rephrasing this question. There's some issue in this question then. Now, look at this question, everyone. What is the primary responsibility of the banks in reconciling with third party vendors in ATM operations? Monitoring currency exchange rates, timely adjustment of reconciliation entries, centralized monitoring of ATM, or ensuring accurate loading of funds in ATMs. What is the primary responsibility, everyone? Basically, na, when we are looking forward towards third party vendors in ATM operations, we have to go for it sometimes. Why do we have to make sure? Because we need to ensure that accurate loading of funds in ATMs is possible, right? So, just to maintain that accuracy, we have to reconcile with the third party vendors with whom we are working. You know? So, in this case, the correct answer is going to be ensuring accurate loading of funds. Now, what does the term nostro account signify in banking? Customer's personal account, overseas branch account with bank, or centralized monitoring account, or special savings account? What does the term nostro account would talk about? Nostro account says that overseas branch account with the bank. Matlab there is some other branch which is there outside India and they have an account with our bank. So basically, overseas branch account with the bank is called Nostro account. Okay? The answer is B. Overseas branch account with the bank. Why do unmatched items in reconciliation of Nostro account represent? What do they represent? Successfully reconciled entries, items that need further investigation, cash transactions requiring adjustments, or revenue items with clear write offs. What do unmatched items in reconciliation of Nostro represent? When we have any unmatched transactions, that simply means we need to have the items that need further investigation. If there is anything which is unmatched, that has to go through investigation. Without it, it is not possible to find out the problem and eradicate the same from our business. Right? So items that need further investigation. Then everyone, now comes the next question. Which branches typically reconcile balances with RBI? All the branches of the bank, only branches with currency chest, only select branches with RBI accounts, or centralized monitoring branches? What would be the answer, everyone? Which branch typically reconcile with RBI? All the branches, or only branches with currency banks, or currency chest, or only branches with RBI accounts, uh, or centralized monitoring? Okay, where anybody who has a transaction with RBI will be saying yes, I sent RBI 10,000 rupees, and even RBI will say yes, I received 10,000 rupees from this era. So technically, where you have a transaction with RBI only, then it has to be only select branches with RBI accounts. Okay, so only select that specific branch in terms of reconciliation which has an account with RBI. Done, everyone? Okay, so that's it for the day, everyone. If you haven't subscribed to our channel yet, then please go ahead and subscribe to our channel now. And for the same, you can download our app as well. In the app, you will find, if you're looking forward to any of our courses, then it will give you another 1% discount, everyone. So this 1% discount is available only, an additional 1% discount is available only if you are having our app. Okay. Now, if you are thinking to take up any of our courses specifically regarding the JIB, then you can take up the JIB Mahapack 2.0, the JIB Mahapack 2.0, which is for 3 months, 6 months, and 12 months. And there it is for 600 hours, and it is available for 276. Test series is there, and then ebooks as well as videos. All these things are there. In the JIB Mahapack, you get English medium classes, bilingual classes, test series, or any other revision batches that we are adding during this specific period, everyone. So that these all things are available for you. Rest, what I can say is you can use the code Y541 and you will get a discount of 81% here. So 5999, it is available if you are using it for the point of you are purchasing it as early as possible. The offer is definitely there only for a limited period. So what you can do is go ahead and use the code Y541 and get 81% discount. And this is the maximum discount which is available, and this is the perfect time then, because you get the maximum discounts with good amount of validity period. And we'll be meeting tomorrow at the same time at 7:30 p.m. everyone. Thank you so much for being there.